Hello everyone, welcome to another one of our online tools tutorials. Tonight we're going to be talking about the SSG Plus stock analysis tool. My name is Ann Cunez, and I'll be watching your questions, acting as the host. But the main speaker, the reason you're here, is to listen to Susie Artsberger. She is our Director of Information Technology at the Home Office. She is also the person in charge of these tools. She knows them inside and out. So Susie, why don't we get started with this SSG Plus tutorial?
Thank you, Ann. Let's get started. I just want to thank you and thank our backroom staff and thank everyone who is taking the time out of their evening to attend our webinar live. During the webinar tonight, you might see some tickers, but please do your own research. Don't go out and buy stocks just on the basis of this demonstration. Also, we may link off to sites that are unrelated to Better Investing, and this is not an endorsement of those sites. This is just a demonstration of our integrated research. Our session is being recorded for future use in case you have to leave or in case you want to review it at a later date. So with that, let's go over what we're going to learn in tonight's webinar. We'll do an overview of the SSG Plus, how you access it, how you use it. This is not an in-depth discussion of our stock selection guide methodology. We will certainly do and perform a stock selection guide, but we're going to move quickly through some of the forecast judgments. Those judgments are an important part, and we have lots of other resources. If you have questions about why would she forecast something like that, we're not going to get too much into the whys and wherefores there. Our guide in this whole process is what we call our Quick Start Guide. It is available as a handout, and that handout can be downloaded through the GoToWebinar control panel. When we post the Better Investing webinar on the website, on the Better Investing website, we'll also post these handouts. And if you have questions along the way, please, please, please feel free to submit them to us. We usually get to most of them during the webinar, either live or answered directly back to you in the chat panel. But if by chance there's any left over, we'll try and circle back and answer you by email after the webinar. The webinar recording will be available usually within a day, but maybe a couple of days, and we'll post it to our YouTube channel at Better Investing, and a link will be included in your follow-up email. Let's give you a little bit of an overview of that Quick Start Guide that I mentioned. This is what it looks like over here. That's the front cover. It's available as a handout. If you happen to attend an in-person event, you'll see a lot of these little guides in a pamphlet format. The one that you're going to be able to download is an easier to print, bigger version. We do have a number of quick start guides available, one for each of our tools products. And what they are is an easy step-by-step way of getting from point A to Z in minimal amount of steps. So it's the basics. So that's what we're going to go through tonight. These guides are always available in our Help and Information tab in the Tools as well. So the Quick Start Guide handles how to access the SSG Plus, how to open a new or saved study, how to visually analyze your company's fundamental data history and some quality indicators, how to review peer data and change your peers, how to forecast sales and earnings, how to review that price to earnings or PE history and using that information to help you forecast your prices, and then how to review your potential return after you've done everything and finished your forecasting. And finally, how to save, share, print your SSG, and do some research. When I'm talking, tonight we're going to be talking about the SSG Plus, but it is actually part of a larger suite of tools, and we have tutorials for each of those Core SSG is a very similar product, but it goes step by step. So what we're looking at tonight is the faster product where things are all on one or two screens, along with this tool suite, which is incidentally all online and web-based. You have a whole bunch of classes, a company research page, a stock comparison guide as well. If you are unsure about which product you may have access to, simply try to do what we're doing or send us a question to Member Services. You'll get that link at the end, and we can look it up for you and help you out. And remember, no matter which one you use, the Core SSG or SSG Plus, they are the same basic methodology, they use the same data, and you are going to get the same results. So you can actually switch back and forth between those two tools. All right. Moving on, let's talk about how we can access the tool. This is a screenshot of our member homepage. And the links to the online tools are up here in the upper right corner. And so let me highlight that a little bit. Green box, upper right. And what we're going to do tonight is actually go directly to our stock selection guide by entering our ticker symbol here. Now we're going to end up doing this live, so this is just a little precursor. But links to the other tools, links to your studies, that you may have been saved are right here. A link to compare stocks is right here. A link for the company research data is right there. So we'll look for that green box again when we go live. When we get there, I just want to give you some introduction to what you're going to see. So this is the first tab of our stock selection guide. And you can see a whole bunch of tabs on the left, and they are basically one for each tool. And tonight we're concentrating here in the SSG tab for stock selection guide. Now if you try this process and come into the tool and it looks like this, it's an easy win. You have access to the SSG Plus. If you have access to a tool but it doesn't look like this necessarily, you'll be in the Core SSG, and you can try and switch back and forth between Core and Plus with this little button up here in the upper right. Other things that are going on here on this page are the top navigation. This is where we go from tab to tab to tab. So we're going to start here with the number 1 tab. We'll work tonight through this number 2 tab, which is for valuation and return. So if you're already familiar with the methodology, this is what we might call the backside. There's a 3rd tab here for quarterly data, and that is beyond the time of what we are probably going to be able to get to tonight. But that is all about analyzing the quarterly data of the company to see more near-term trends. Other areas of the screen that we have going on, this is the top menu section. We'll go through some of these tonight. File is where you're going to copy a study or save a study. Data is where we can change the data. Print, research tools, we'll get to those near the end of the class. In the middle is a big graphical display of data. The SSG Plus has all of the graphs in one grid here. There's a legend to turn the various data items on and off on the graph. Down below is a tabular display of data. Some of the data that you see up here is replicated directly down here, and usually with a growth rate or a trend line. And then up here on the side, we have boxes for recent quarterly numbers. We'll take a look at those when we start forecasting. Analyst consensus estimates are right here. We can change our projection start point up here in this box. So if those terms are foreign to you right now, hang with us. We'll be demonstrating them. But this is page 1. The second page is very tabular, so we don't go into that much detail in advance. All right, let's go live. Let's start this. Any questions before we go there, Ann?
No, ma'am. We're all just waiting to go live.
Oh, you're so excited.
We
all
are
right.
excited.
Go. Here we go. I am bringing up our member homepage. I'm actually going to turn on the view so I make sure I'm not moving too fast here. So everyone should be able to see our member homepage now. This is that green box that I was referencing before, and this is where I'm going to enter my ticker. So I'm going to go ahead and do that. And I'm just going to start typing, and I have a couple of options. For tonight's purposes, we're going to be talking about Alphabet, ticker GOOGL. Full disclosure, this is one that our club owns, and so please, again, do your own research. Now, after I enter the ticker, I'm going to click on this little go, and then that will open the tool. I actually had another one already open. I'm going to close that. So this is the one that is opening now, and your screens should be caught up in seeing the stock selection guide proper. It should open that quickly for you, even on a mobile device. So you can use this on any kind of web-enabled device. You must be connected to the internet, but many different operating systems, phones, tablets, and so forth, this product will work on. So here's the live view of what we were talking about before. And let's get acclimated again. Here's our big visual graph area. Here's our tabs on the side. Here's that SSG we're talking about. Here are our tabs across the top. And let's explore this screen a little bit. So starting at the top here, many people don't realize that if you mouse over this top bar, you can see more information about the company. You may end up clicking through on a link or just putting in a ticker that you don't know much about. So this is a quick way of figuring out the sector, the industry that the company belongs to, and a short description. That might be enough to quench your interest for the moment. If you are in the tool and actively studying something, you know all about it, you may find it helpful to double check the closing price and when that price was input into the tool. You may find that you need to update. We'll get to updating later, but you may need to update your data because that closing price is old. It also might be helpful to know when that fiscal year ends. So for Alphabet here, and I may call it Alphabet or Google, so indulge me please, but for Alphabet here, we see that their fiscal year closes end of December. And so we should expect, that's December 2017 has passed, we should expect to see data in another couple weeks. Annual data takes a little bit longer to populate our tool. In the graph area, we see all kinds of colorful lines and a lot of action when we mouse over things. So when I mouse over the annual data points, I see the year and the actual value. If I want to know what those colorful lines represent, I can reference the legend. So here, and I'm going to actually blow this up a little bit. I can see that this green line, if I look over here, the green line is referencing sales. The fuchsia line, if you will, is referencing pre-tax profit. The blue line is for earnings per share, and the black bars are our price bars. So what we see here, just by looking at this graphical area of the screen, are a lot of bars that are moving up and to the right, indicating that this company's fundamentals are growing. So that's, in a nutshell, what we were looking for. And the price bars tell us the high and low for that particular year. The last price bar that hangs out beyond the last fiscal year can tell us the 52-week high and low, as well as the red crosshatch tells us the recent closing price and where that is in reference to the last 52 weeks. So I can tell at a glance that the 52 we're either at or very near the 52-week high for this stock. So again, without looking at any data, visually that's what I can see. And what we're looking for, the essence of our methodology, is that sales is going up and we're looking for decently growing companies. We're looking for earnings and to roughly match that, and pre-tax profit to roughly match that kind of growth rate. Straight lines are a plus. So this is Alphabet or Google, and back in entering into the recessionary period, we are seeing a little, not quite some straight lines, but man, it's pretty straight from here on out. I'm also seeing, if I kind of squint and look at the trend line of the price bar, that the price is generally moving in, well, it's definitely moving in the same up and to the right, the direction. It's actually moving, I see it moving a little bit farther away from earnings. So that tells me that things are getting a little more expensive for this stock. These aren't wild swings, but the market is valuing the stock a little bit more on trend, as a trend, if you will. We see some other bars here. And so there's these dotted lines that are hanging out here. Those are my forecasts or projections. Because I haven't done anything yet, they're flatlined at 0. So one for sales, one for earnings. These little grayed out but similar color lines are what the analysts are projecting, or the analyst consensus estimates are projecting. These numbers come from Morningstar's consensus estimates. It's not only the Morningstar analyst, it's multiple analysts that they aggregate together. So we see a 2-year trend or a 2-year forecast for sales, and a long term, which is generally 3 to 5 years. We've projected it out 5 years for earnings. So that's a nice little help for when we, number one, when we're doing a visual analysis, are the analysts generally on trend with history? Yeah, great. And then we'll come back and circle back and use that later on when we get to forecasting. Now, some other things that are going on here, if there's more data here in the legend that we can turn on. For example, you might not be able to see it until I turn it on, but this little guy that I'm pointing to says dividend. And if I turn that on, I don't actually see a line come on the screen. And we'll see later that Google or Alphabet does not pay a dividend. I can turn that off. I can turn on free cash flow per share. And I'm looking for the company is continue to make free cash flow. If this falls off a cliff, that might, well, it's a red flag that needs to be investigated. I can look at book value. Hopefully the company's book value is increasing as their other fundamentals are increasing. We can look at long-term debt. And is it growing? So it went from practically nothing to something, and we'll look at that as a percentage of capital and see if we find it alarming. So that's the trend, and what we see is it's flat or declining, so that's a good thing. We can look at net income in addition to pre-tax profit. We can look at shares outstanding. So this sometimes is interesting to look at in a graph like this to see if there's a definitive trend on buying back shares or issuing more shares. Again, we can mouse over this data and kind of see that their share count went up in this particular quarter and it's kind of dropped back down to 703. But in general, it's climbing a little bit. So that's what we can tell from our graph. Another thing here, and I'm going to make the screen zoom back out a little bit, that we can do is if we want to compare like the growth rate just visually between sales and earnings, we can actually move these lines. So, and what we see is that, sales is actually pulling away from earnings a little bit. We can move the sales line down to where we need it. So sometimes people use this as a technique. So feel free. If you get to a spot where you want to reset the chart, that's what this button is for resetting the chart. And then things will pop back into their default location. I'm going to move down a little bit Well, I'm going to point out these are the recent quarterly figures for the company when they reported in September. So this date here tells us when they reported. I am going to circle back to that a little bit later, but here's that live view of that projection line start point. And what that's doing is, see this dotted line where my projection is? Right now, mine's attached to the quarter. I'm projecting from the latest quarter. I can change that and project from the last annual, and see now that dot starts here. I can project from the latest trend line. Not much different in this case. Okay, down at the bottom of our page is the tabular view of the same data. So for some of these, so same data here on, here's the sales and the individual fundamental data, which is identical to what we see here. We also see in this view the growth rate. So for all of these 10 data points, or 9 periods, the growth rate is 21%. This is determined by this growth line that you see here. It's a least squares line. That's the analysis and how it's done. The historical earnings has a line, and that historical earnings growth rate for all of those 10 data points is 17%. And pre-tax profit is very similar at 17.1%. Scrolling down a little bit further, we see some items related to evaluating management, and particularly, is there an indicator of how well of a job that they are doing? And that couple of items we look at here, pre-tax profit on sales. So we would like to see companies who are best in their industry or best among their peers at making money and making that pre-tax profit on sales. So we're looking for a level relative to others in the industry, not just a flat number in this case. We're looking for at least stable or growing. So this is the 5-year average, and the algorithm or the computer program here compares what is the 5-year average against what has happened in the last couple of years. And if it's up, it turns this little graph green. If I mouse over it, I also see the words up. Yellow means stable or even. That's also acceptable. Debt, down, green, because we want less debt. You want higher profit, less debt. So green is an indicator of a good condition. Yellow is stable or even and is perfectly acceptable. If you are not seeing these colors and you're seeing words there, I'm going to show you a trick. Go up to Tools and Preferences, and in the trend display, change it to Graph. And you will see these nice little graphs there. Okay, so what we're going to do, I also want to explain open circles because that comes into play here. That's always a question. These dark circles, the filled circles, are the annual data. The open circles are quarterly data. So it's just a visual thing to separate them out when you look at them. After you've done this a few times, it is second nature to say, oh, okay, it looks like this, and then here are the recent quarter data that come into play. Another thing that you can do here is if your company exhibits some anomaly and you would like to exclude that in particular from these growth rate calculations, we offer you the ability to take an outlier. Now an outlier is simply a whole year of data by clicking on the chart, and it grays it out and it takes it out of the calculation. So we see our calculations for growth rates changing a bit. So if I take out the last 2 years, now I have some pretty straight lines, and I see that the historical sales growth rate is still around 21%, and the historical earnings growth rate is about 13%. So yes, our visual analysis that the sales is growing at a greater rate than earnings is borne out by the actual averages here. We can also take outliers in any individual cell. So say, for example, for some reason, I felt that 24.2% was an anomaly. It could be that that year the company had some special condition, and I felt comfortable saying, this is not representative. You can simply click on the cell, and the 5-year average will change, and the trend line will update with the new data. So just click these on and off. You can also click on and off individual cells here and add them as outliers, and your graph will respond appropriately. Okay, continuing on in our quick start guide reference, the next thing we're going to take a look at is reviewing peer data. So I'm going to ask the audience to be a little bit interactive here. So if we're studying Google, who would you say that Google's peer is, or a similar company or a close competitor? So write that into your chat panel, and we're going to end up changing the peers that come up with maybe your suggestions. So we see Yahoo, Apple, Facebook coming in. So when I click on the Compare Peers button here, I'm going to bring this up, and it's going to be a pop-up in my screen. And there will be a set of automatically chosen peers. In this case, it brings up Facebook, Baidu, and Tencent Holdings. So let me interpret that a little bit. How are they automatically chosen? Well, they are all in the same industry, and they are of a similar size. And what is that? So I'm going to close this down for a second, and we're going to revisit some of this information. If I mouse over this, I see the industry is internet content and information. So when we're thinking about peers, Google certainly in internet search, internet content, and that's one thing. Similar size. When I look at the size of this company, it is $90 billion and change in 2016 fiscal year revenue. So we should be comparing with similar size companies. Sometimes that's not always appropriate. Maybe your best comparison is in a slightly different size class, but for the default companies that are peers, they are the same industry, similar size, and ranked by growth rates. So we should see some companies with some decent earnings growth rates. And what do we see? Facebook, Baidu, and Tencent. So Baidu is a Chinese company, and it turns out that Tencent is a Chinese company. So we can replace those if we want to. Now let's say we don't know anything about Tencent, don't have any interest. Before you go replacing it, however, let me back into, if you want to see the information for that company as a comparison, all you're going to do is click on the legend. Remember how we did that on the front side? We're going to do it here with the peers. So we can see these three companies stacked up against one another. Now, Baidu has also got a lot going on in the internet content space. Tencent is actually the largest social media company in China, which is WeChat, if you're familiar with that. That's the company behind WeChat. So as is the nature of these companies, they're often much more than they appear to be on the surface. So let's look at these growth rates, all with very, very robust growth rates, Baidu being the smallest of those companies. Now let's say we're studying some other company and we want to replace it, or we're studying Google or Alphabet and we just don't want a Chinese company in there as a comparison. So I've seen Facebook come across from our attendees. I've also seen, I'm going to put Microsoft in here. And if I didn't know the name of the Microsoft ticker, I can simply start typing the company name and it'll get picked up, and then I'll click on it. And let's see, who should we compare that against? Well, Safari is really Apple. We see Alibaba, Yahoo. Yahoo was mentioned. Yahoo doesn't trade under that name, or else I would have seen the ticker come up here. So let's put Apple here. They're not quite the same kind of company in my opinion, but they're, big internet tech company. You can see some similarities. Now, how do I get their data in here? I'm just going to click on Update Study. And what this does is it updates it across the board. If I chose to save this study would, until I changed them again, would be associated with these peers. They are not reset to default every time that you open them. So again, I can pull up all of this information and see, hey, here's my Google, very straight. Here's Microsoft, a little bit flatter. Here are the growth rates. So we see Google, we see Facebook, we see Apple, we see Microsoft. We see Apple is the largest by almost double of any of those companies. Similarly, you can check out every single comparison for these tabs, the earnings per share comparison, pre-tax profit raw values, pre-tax profit as a percentage of sales. And this is often informative if you're looking for the best pre-tax profit in the industry. I will say that all of these companies have some pretty robust profits. Return on equity. Here we're looking for companies that are trying to be around 15%. This is returning more money to the shareholders based on what is invested in the company as equity. Debt to capital, we talked about that a little bit in that we want smaller debt, especially as compared on a percentage basis to capital. So when we look at Google, and I can turn that on and off here, as compared to, who's the lower one here? Facebook has very little debt. Apple and Microsoft carry a fair amount of debt. So that might be something that you want to investigate and decide whether you're comfortable with that or not. We can compare PEs. So all of these companies are in the tech space. Here's what you might find. So Facebook back in the day had very low earnings and a decent price, so it pushed this price to earnings ratio very high. And as a result, we're not seeing much definition with the data below. My strategy here is to take Facebook out by clicking on the legend, and then the graph will rescale. So what we see here is that Google, as I mentioned before, is more highly valued than some of the others. We can see the trend of the valuation kind of going up. It used to be higher back here. It dipped back down, and now it's headed back up a little bit. Apple, out of these companies, is the least out of the mix. And that's just, consider it a point of reference here. Microsoft is where it is. We got the same data for the low PE. If the company pays a dividend, we will see payout on that graph. So we'll also see the data down here. So we can see at a glance that Microsoft and Apple pay a dividend because they have a payout, and the other two don't. I'm going to answer a question live here, a couple of them, before I leave the peer screen. So one question came in that some people are going to say is confusing or potentially needs to be fixed, and that, watch the color on Google. So the line there is green, it's blue. Actually, what's going on here is it's matching, in a lot of cases, what is going on with, see the fuchsia of the pre-tax profit? It's picking up the same data that is used here and the same colors that are used. So that is the reasoning behind it. And just kind of pay attention. Your company under study will always be listed on the top. And then another question is, when you change your peers, do the industry average and peer average change also? No, they are always referenced to the original industry average. So the industry average is all the companies in that internet content industry. Google's in the internet content industry, so the industry average is all about that same industry. A peer group average is not the average of these four. It is actually all of the companies in that industry that are large sized in this case. So Google is large, this peer group average is large. So when we look at return on equity, in this case, the peer group average for large internet companies, return on average is a little bit higher than we're seeing with Google, and higher than we're seeing on average with Facebook. Apple's got a great return on average that's significantly larger than the other ones. So you can use that in, as a helpful guide as you're trying to figure out if this company is worth further study. I'm going to answer another one that says, actually a perfect example here. Can you remove outliers on this comparison graph? For example, can we get rid of this PE anomaly here? Remember, a return on equity. Remember, this was the year that Facebook had some pretty low earnings, high PE, low return on equity. Unfortunately, no. So that's a great suggestion for a future improvement, but you cannot on this graph. So just kind of eyeball it and see through either the visual or looking at the data when you're looking at the peers for a reference point. Okay. Any other questions on peers before I leave this? I might have missed a question, Ann.
No, you're doing a great job of watching that pain. So good job.
Okay. All right. All right, moving on here. We talked about evaluating management, and we talked about the visual analysis. So it's at this point that before you put extra work in that you're going to want to decide if this company is worth further study. If you're satisfied with what generally the trends are and generally the growth rates, I will tell you that for a large company, growth rates like 21% or 35% are spectacular for a large company. We're looking for growth rates, and correct me if I'm wrong, above 5 to 8%. Right,
5 to 7% we say for a very large company, yeah. And this one is way above that, right?
Way above that, right. So, but I'm using words like if you feel it's acceptable. So every company doesn't have to be 15% grower. Large companies often are never going to achieve that growth rate. It just so happens at this point in time, we have a lot of technology companies that are huge and with high growth rates. Are the management trends where we like them? So for our purposes, I'm going to say yes. We're going to continue on and put the time into this and start forecasting. So since our questions are all cleared up now, we're going to move right into forecasting. If you're following along in your quick start guide, we are on step 5. And we're going to go to forecast sales and earnings. So one thing to know about this tool is that when you are forecasting, that every place you see a green box, that is where you're going to enter something. And if I mouse over this one, you can see it says click to enter sales forecast. And every green box that you click into is actually going to bring up a pop-up like this. And that's where you're going to do your actual entry. So in this case, we're looking to add a sales growth rate forecast. Now, I have a lot of reference points that I want to bring to your attention. I have, first of all, let's look at history. So our history says for the last 8 years, where we can remove these outliers, that my sales growth rate's about 21%. I could do this brute force. I could look at the last 5 data points of growth rates and see that it's 15%. Okay, so now we're not dealing with 0 to infinity, we're dealing with someplace 15 to 21. Another reference point that we have here is the last quarter change, and that is 23%. Remember I said I'd get those recent quarterly figures into the narrative here. So that's 23.7%. So that leads me to believe recent growth has been increasing. And if I can, I can visually look at that and say, oh, okay, yeah, maybe so. Take that into account. So maybe I want to trend towards more the upper end of that 15 to 21%. Let's take a look at what sales estimates are. Now, I'll tell you, I've seen various sales estimates for this company. The Morningstar ACE estimate is 14.7. I'm going to bring in also a couple of research links here where you can go look at other estimates. So if I mouse over research and go to analyst estimates, we have another set of estimates that are potentially at our disposal. Reuters and Yahoo, I'm going to go to them because they are actually the same base data but presented a little bit differently. That's a theme in the industry. There's not so many data providers. So what I can tell you that Reuters and analysts use the same analyst estimates. I'm familiar with Yahoo. I'm going to go there. It'll bump me right into the page for Google and right in the analyst page here. So I'm going to scroll down, and there is a revenue estimate box. And year by year, I'm seeing for the current year and the next year, 22%, 19%. So we're building up this collection of information. 15 history, 21 history, 14 from Morningstar, 22 for this year, 23 for the last quarter, 19%. So I'm going to enter a number. You don't have to agree with me. You'll find this in your own club as well. You can mentally sit there and say, I don't agree with her. I would be higher or I would be lower. I'm going to put in the number 17% and move on. Our next step is to forecast earnings. So I'm going to click in my earnings box here and bring up a larger panel. There's more going on here with the forecast earnings box. And what we have is a simple way to just enter a number here. We can see the analyst estimates repeated for earnings at 19.6. Now this is a long term, and long term is not specifically out 5 years. It's generally considered 3 to 5 years, but longer than 1 or 2. 19%, 19.6. And then if you're familiar with this process, the preferred procedure growth calculation. So this is like a mini income statement or a business model statement. And the concept behind this is that you start out with the judgment I already put in for the sales growth. We look back at the last 5-year average for pre-tax profit margin and say, okay, I'll use that number and I'm going to back out what the theoretical expenses are. I'm going to back out taxes. And usually I say I don't change this. And I'm going to tell you it's up to you now. Ann did a great presentation last night at Ticker Talk on how the new tax law, corporate tax rates have changed and how they might impact this portion of your SSG. So please go check out that webinar recording. And based on your analysis, you can change this. If the company pays preferred dividends, data will be populated. And all of this will calculate. So let's say I'm going to change this to 18% just for grins. This number will recalculate. These are the number of shares. So we have our leftover earnings that we might see 5 years from now. We're going to divide by our proposed number of shares and come up with a potential growth rate for earnings that is based upon math and the way the company is performed. You can see some supporting data over here. So in the sales section, we see the raw sales number and how the last quarters have trended. We see the pre-tax profit margins, both as a trailing 12-month basis and quarter-over-quarter basis. So what I can see here is that my trailing 12-month numbers look like they're trending downwards, but I also see that there is a quarter here where pre-tax profit margins took a temporary tank and then came back up. I might want to take a look at that. And maybe 26 is too low in this current environment. Or maybe you're the type of person that doesn't like to change this. If I'm the type of person that does, maybe I like 27. And that's how I might use this data. Taxes, this is a history of the previous year's taxes. Our tax reform and the change in the corporate statutory rate are going to produce some changes here. So just look for what that means for the company before you assume that it's automatically a lesser number. This diluted shares outstanding tells me in general how the company is managing shares outstanding. So what my takeaway from Google or Alphabet is that they're issuing shares, probably as part of stock-based compensation, and they're not buying back everything if they're buying back anything to even that out. They're not buying back shares to manipulate or manage the earnings number. So I can either decide to keep this or say maybe if they trend higher, it might be 710. So that's how you might use some of this side data. The sales growth trends tell us over a number of periods if the sales growth was higher or lower. So for all of those 9 years, it was higher, it trended a little lower, and it's coming back up. That's what that's telling me. On the earnings side, we see that it was hanging around there at 13, 14, and it's trending up. Trailing 12 months here, there must have been a quarter in there that was low because our single quarter basis was very much higher. I'm going to answer a question that I see coming in about another reference point, which is other analyst earnings. So again, we've got our analyst estimates from Morningstar, consensus estimates. We have our preferred procedure calculation. I can go back to, I'm actually going to close this out. I'm going to do it again. We go to research, we go to analyst estimates, and we go to Yahoo. Now Yahoo's long-term earnings estimate is down at the bottom. I'm going to go all the way to the bottom, and it's this next 5 years per annum. So Reuters, which is the source for all this, says it's 20.9. So in our head, we go back here, we open up our earnings panel, and we say, okay, actually, let's reference history. 13% for history, 32% last quarter, 19% for this analyst, 20 point whatever for the Reuters Yahoo analyst, 18% for preferred procedure with all the default values. So you pick where you want to be in that range. I'm going to put 17. And I'll tell you, if we're splitting hairs between 17.1 or 17.2, it really doesn't matter. Lots of times we just go with a big round number here. Give yourself that latitude to just put in big round numbers. We have our first 2 estimates done. We have 2 more to go, and then we're done with our stock selection guide. So before I turn the page, Ann, do we have any more questions that I might have missed?
No, the back room's doing a great job for the things that you're not picking up live. So,
okay,
good job.
Great. Let's look at our backside, if you will, or the second tab, which is where we discuss valuation of this particular company. So it's great that we've got a good growing company that we think stands up to its peers and the market's going to like, but we don't want to buy it at an overpriced situation. So this back page here is a lot of data and tables to help us get to that analysis. And what we're going to do is review the PE history, that's price to earnings history here. And this shows us the last 5 years. I can see my PE history, and it's generally, I can eyeball the data here. This is the average for the last 5 years for both on the high PEs that we've seen and the low PEs. Here is the current PE ratio at 39.7. Actually, I'm going to blow this page up a little bit. At 39.7, it's higher than we've seen. Remember, on the front side, we saw that this company was making a 52-week high. Well, here we go. We can see that reflected in our PE ratio. Generally, we don't like to forecast numbers that are at the complete high end. So these are great starting points, 30.1 or 21.3. If you're the visual type, let's look at those values in a graph and say, is there something wildly going on? No, what we see are that over the last 4 years at least, the trends have been generally higher. Now that should be no surprise to anybody that's already in the market, where we see the market is at its peak. And you're trying to project out a couple of years. if not a full 5 years. So do you go even higher, or do you remain conservative and say, maybe they won't get too much higher than this? Well, I am a little bit more on the conservative side, although I'm a little bit more aggressive than Ann. And I'm going to close this graph out. And I'm going to be right around this number here with a 30 high PE. So the concept in our methodology is that we multiply a price to earnings number times our potential high earnings 5 years out and come up with a stock price. And I see that that stock price might be $1,900.66. There's actually a quick way to enter some numbers. If I just like the pure average, I'm going to double click there and that number is going to go right in the box. Or I can just retype it to any number that I like. And I'm going to click Update Study. I'm not done yet. Until I'm done, this invalid will stick here. I need to have both of these entered. So again, another green box. I'm going to enter a low PE, and then, this is a two-step process, and then pick a low price. So I'm going to advise everybody to take a look at where the low PEs might be. And once again, we can also pick outliers in this cell. So if I take out that 17 as an outlier, this number starts bumping up to 22. I could have taken it out on this side, and our average is more like 31. I'm going to be a little bit higher on this number, and I'm going to go with a plain 22. So I'm going to put 22 into the box, and then I'm going to show you what else is going on the screen. And here's our low earnings per share forecast. How did this number get in there? That is simply the trailing 12 months. I have set my program to pull in the trailing 12 months number into this box. This is a preference setting. I'll get back to that. So low PE or the low price could be determined by the low PE times the low earnings per share, and I can see that the low price might go back down to 657.8. What else do we have going on here? Well, you know what? You can pick your own low price and just enter a number here, and maybe you think that's 800 or something like that. You can look at the recent market low, which out of the last 2 years has gone all the way down to 490. You could pick the average low price of the last 5 years, which is even lower. That's really low, and it's really a testament to how fast this price has increased over the last 5 years. Then the way I might use this is I might go back to, okay, this is the one that was calculated for me. How does it match what I've seen in recent history? Is it feasible it could go down this far? Well, we've seen it go down as far as 812 in the last 52 weeks. So yeah, if we have a unique situation, it could go this far. But you decide on that. And so I'm going to go back and pick this radio button and click on Update Study. And that will push this low price number into our guide. So again, this is a two-step process. We're going to pick a low PE and then see what our forecasted low price is, and then do a little comparison and see if that's the option that we're going to choose. And once we have that, essentially we are done forecasting in this particular company. If we're dealing with a company that pays a dividend, there's one more thing that we might do, and that is looking at the payout. So if we were working with a company that paid a dividend, we'd see the dividends that were paid every year. We'd see what they are currently. We'd see how much of each dollar of earnings is paid out as a dividend. And if that's stable and on trend, or if the trend is increasing or decreasing. And in that case, we would enter our payout judgment. With a company like Alphabet that doesn't pay a dividend, there's nothing to do. So what we have here is a company that is calculated to be in the hold zone. And if I want to see what that looks like visually, I'm going to go to my zoning section here. So I have said break my zones up into 25, 50, and 25 zones. And with the top and the bottom being the sell and buy respectively, and where does this price fit? So we're not halfway into the hold zone, but we're certainly beyond the buy zone for this stock at this price. This is represented in the yellow hold number. We can also see that if we bought, let's take a look at some of these boxes here, and what this is telling us is if we bought the stock at this price, even though it's a hold, if we went ahead and did that, we might still see a potential price appreciation over 5 years of 65%. Our upside downside ratio, meaning the potential return as compared to a potential loss, is 1.5 to 1. Well, the number that we're looking for here theoretically is 3 to 1. We would like to buy stocks that are in the buy zone as well. So when would that be? According to the calculations that I have put in here, that might be at the $9.85 price. And we will also see that number. I'm going to skip down a little bit. We've talked about high price, low price, zoning, upside, downside. Here's the calculation and how we got to it. That is, just a comparison of how much upside there is as compared to downside. And our methodology suggests that 3 to 1 is a guideline. This price target says over those 5 years, you might have 66% price appreciation. When we get down into compound average growth rates, this is that bottom section. So I'm going to go right to the results summary here on the right. And we're in step 7 now of our quick start guide, where we're reviewing potential return. And what this is telling me is a recap that right now this is a hold. The upside downside ratio is 1.5 to 1. The total return is 10.6%. Now this will go green at 15%. So this is different than growth rates. Growth rates in many cases can be impacted by how large of a company that we're dealing with. But you might have a company with lower growth rates with a lot of potential price appreciation, and you can still get to a potential return of 15%. So at 10.6, all it's indicating in yellow is that it's not that 15%. And this total return is using the high, if your stock reaches that high PE 5 years out. Now, what you have to do is compare these numbers to what's already in your portfolio and decide if at this price it is so this is at this price. Decide if it's a good deal for you. If you wanted to make a 15% total return, you'd have to wait for that stock to drop to 977.8. If you want, which is a little bit different than if you wanted this stock to drop into the buy zone, and it would drop there at 985. So just a couple different ways, and they're a bit subtle, but a couple different numbers for you to reference here. These compound annual returns are also listed over here, the 10.6. If you are using your projected return, and some people do this, and say, I'm going to use the average PE, meaning what that means is the average PE is simply the average of these two numbers, and calculate that. Instead of 30, I'm going to use, and what is it, 47, 23, 24?
It's the average of your projection, your projected
right.
numbers.
I'm sorry. Yeah, okay. Right. So I misspoke. So the average, I've got a 30 and a 22, so it's about 26 and a half.
26, yeah.
26, yes. Percent, or 26 PE rather than a 30 PE. So you get a little bit less projected return here. So stack that up in comparison with the other stocks that you're considering, or the other stocks you might already own in your portfolio, and decide if you want to move ahead with this, you want to wait till it drops into a better price, and that's essentially, we've worked our way through a stock selection guide. So before we move on to some of the other features, Ann, do we have any open questions here?
Yeah, just a couple. A couple came in. Could you review, and if you did review this, and I didn't hear you because I was typing, I apologize, but Carl's asking if we could review where that $65.56 estimated high earnings per share comes from.
Sure, absolutely. So he picked up on the fact that it's right here, and if we were clicking on the green box, it's already pre-populated here. That is a function of the forecast we made for earnings on the front. So a couple ways of looking at that. We see, I'm going to scroll over a little bit, give it time to refresh for everyone. We put in 17% as our earnings forecast. 5 years out, if we're projecting from our recent quarter, when we start here, we project all the way out. That works out to be 65, 55, or 56, penny off. That's that number. And it gets transferred into our stock selection guide to be used for the valuation calculation.
Okay, perfect.
Anything else?
And one other question. Could you review, it went a little fast, how you auto-populate the trailing 12 months in the low price option?
Sure. In low price here, I mentioned in this second box where we're doing a simple PE times earnings calculation, this comes automatically populated with the trailing 12 months number. And by default, the program will do that for you. So it is, I can also click on it. If somehow that is not the number that's in there, I can click and get that in there. You might have seen this little option change. So I actually like all my studies to auto update. And what that means is every time the company reports, the program is going to recalculate that trailing 12 months earning and apply it to my low price calculation. It's a little bit of a time saver because I don't have to go in and update this number. So if I have chosen this method, my low price should keep rising up automatically based on the trailing 12 months earnings. So hopefully that explanation will work and has not
I hope so.
confused them further. Okay.
All right. One final question, and this is regarding that summary that you've got at the bottom. And there's just a general question. Is that a annualized return, a total appreciation? Yes.
No. It is an annualized, a compound annualized return that you're seeing here. So we like to see this as high as possible while still investing in quality companies. And that's where, my caution is to compare it to other potential investments as well as what you might already have in your portfolio.
Okay. All right. Thank you. We're all caught up, ready for some other features.
With that, I'm going to go back up to our menu area here and talk about some of these menu items because we have gotten through the steps, most of the steps in our SSGPlus Quick Start Guide. You've gotten through a stock selection guide. And some things you might want to do. There's a big yellow note that says this is not saved. If I like the work that I've done so far and I don't want to lose it, I'm going to click on this button to save the study. I will also point out that I can go to File and Save. It does the exact same thing, but it's here, it's handy. I'm going to click on it. And you can add text here, you can replace what you see. By default, it comes up with a ticker and the date, and I can put in webinar and save that. And then the study name, is shown right here. So you know that it's saved. My yellow box is gone. A couple other things that I can also do here under files, in addition to saving, I can copy it to another file, if you will, or study. And if I want to make different projections, I can do that now without mucking up the other one that I did. I can share this. I can rename the study. I'm going to show you share because this is super helpful. And I will also point out that if you are doing a stock selection guide and you think you have a problem that you want us to take a look at home office or member services, this is a great way of sending it to us. We can share a copy of the online study. and send it to any number of recipients. We can add people to the list. So let's say I want to do member services. And I want to go service@betterinvesting.org. Now my account here has been populated with my own contacts. So that's member services. And I pick that one. And I'm going to return, and that's going to be in my share study box now. I can add a note. This could be to my club member. And then what will happen is when I do this, I send out an email to the recipient that has a link, and they will bring into their account a copy of the study. So that is how you share online. There's no need to export and import. We always recommend doing this. They'll get an exact copy. If you are wanting to share with a club member just a PDF because they don't have any tool, click on PDF and a PDF will go with it. You can include the quarterly data with it as well. We'll get to notes, but if you want to append your notes to your study, you can do that. Notes will come along if you do the online study. Everything that's in yours will go to the new person as a copy. If you've got somebody in your club that uses Investors Toolkit, you can share out the data file. I will warn you that our recommendation is always to use this ITK data file. The SSG data file does not have everything in it. It cannot be imported in its entirety by Investors Toolkit. It's not that we can't push it there, it's just Investors Toolkit doesn't accept that. So use ITK. And I'm going to share that study out. It takes a few seconds to create that PDF, but from our end, this is all we have to do. Data. You can look at the company basic data, and these are things like, you know, the website, the price date. You can actually manually change the price and the price date if you wish. So you can change anything that will allow to be changed, and it will save it with your study. You can change the annual data. You can add a year of annual data. You can change quarterly data or add to it. And most importantly here, you can refresh your study data. This is another word for update. And those options are just update the closing price. Don't touch anything else. Overwrite the company data and stock closing price. This is the one I typically do. Or create a copy. Don't overwrite it. While you're doing it, create a copy, and I might want to give it a new name as well. And so my typical thing is to do a refresh data here. I just opened this, so we're not going to actually see too much of that, but that will update. Printing. If you want to create a PDF that can be printed, this is your option. You can append your notes or even a second report here. It's going to generate the PDF and store it on your hard drive. Then you will open it and print from there. Research links are pretty much what they sound like, links to interesting research. And we have our company research page, we have the BI magazine. Member sentiment, let me kind of hit that really quickly, where a member sentiment listing is all of the people that have done a study on this company in the last 90 days. So 251 people, 251 studies have been completed on Google. And you can see what their projections are anonymously. You don't know who they are. I can select every study by clicking this checkbox up at the very top of the column and see an average. So this may be a reference point when you are doing your own projections as a double check. I will caution you that this is a totally anonymous thing. We don't know if the same person is creating the same data over and over. So we see, I'll be honest, this is probably me, or might not be. We don't know if they're beginners or advanced, so please just use it as a frame of reference. The other thing that we can take a look at are the company website proper. If I click on that, I can see I'm going to Alphabet. and really easy to get to their investor homepage. They don't really have investor presentations with PowerPoints or slides, but they do have their transcripts, their webcasts here. And no surprise, their webcasts are on YouTube as their default method. Analyst estimates, we covered that during our class. Company summaries, this is just more information about the company. So like if I went through and clicked on Google Finance, it takes me directly to this information. Company specific, ticker specific, and it's just about whatever Google has chosen to display about companies. So a couple of different options there. Filings and transcripts. And can you confirm this is one of your favorites? Because it's one of mine.
I can. I'm a convert.
I have converted you.
Yep.
So we lead you directly to the filings. Sometimes I'm looking for the 10K and the large annual report, and I'll go here. More often, I'm looking at all filings. And don't be intimidated. This is just what I like to do. But we go right to the specific page for our company with all of the filings listed. If you want to clean up that view and just take, I'm going to go to Research, Filings, and just look at the 10Q. There they are. An even more cleaned up view for you. And transcripts, there's a link to the Seeking Alpha transcripts. We have a link to the financial statements, key statistics, price charts that you might find helpful, especially if you're looking at what a potential low price, if it seems reasonable. Tools, the number one tool that I use here, well, I use preferences, I showed you that. One other preference I want to show you is projection line start point. It should default to quarter, but if it's not and you want every further study to be at quarter, please select that and then save it. But the one thing I use most here is notes. So if I want to make a note about a company, I'm going to click on notes, and it brings up pretty much a blank slate now. I'm going to click on new note, and I'm going to say judgment notes. Sales, 17%. Lots of times we don't remember why we picked something, so then later on, when we go back and we're like, oh, why did I do that? You can say, and why. You can also put analyst estimates at various, sometimes I'll copy in what the analyst said. So I'll have that as a reference. You saw me do this. I clicked on Save Note, and it became a saved note. This is now part of that study. I can print it out if I so choose. Those notes will travel along if I share it or export it. They will be in the ITK file if I export it in that format. If I want to come back, I click on Notes again. I can click on it. I can delete note. I can add a new note. It's pretty much as you might expect. There is no limit to the number of notes that you can have, although there is a 1,000-character limit per box. So you cannot write a huge essay there. So any other questions on notes or any menu items that we have going on here?
There was I'm having a conversation, and I think we were having this conversation while you were covering the update feature in data. Mm-hmm. And the question is, when you do update the data and say mm-hmm. Google has fallen from the hold into the buy zone, would that be then reflected on the SSG with the current judgments that you have? Absolutely. Right. If you did a refresh study data, and if you simply updated the closing price and it fell to 970, for example, and that's again based on the judgments here, it would be reflected in that. And you know what, we can pretend, because we can actually manually update the price to 970 and simulate that, and ta-da, it's a buy. So yes, your results here are always dependent upon the data that's input the study. Your judgments are not changed when you update a study. Great. Thank you for that clarification. I think that helps answer this question.
Sure.
That's all. I think we're all caught up other than that.
Okay, well, we're nearing the end of our allotted time here, so I want to point out some tabs that we have going on here before we wrap up. This is a home tab. I'll be honest, it doesn't have much on it. I will point out the help and information tab down here. These are links to all of our basic tutorials that get you through the tool in question from A to Z. These are links to the quick start guide, similar to the one that was supplied as a handout tonight. Reference materials. I'll point out that if you are new to the forecasting process or new to the evaluation process, check out SSG Guidelines for Beginners. And if you are very interested in how we come up with these calculations, you can check out where we come up with the calculations for these different terms. There's a glossary, some FAQs, and so forth. So be sure and check that out. I will point out that this little folder here that's called My Studies is a place that you are eventually going to want to check out after you've saved a study. And our portfolio class covers all the things that you can do when you group portfolios and make reports. But I will point out that these tickers that I created tonight are in my study list. And what I have is a list of everything in my account, its name, its ticker, and so forth. I can sort each of these lists by comments, by date created, by date modified, by many different things here in terms of industry, sector, the size, whether it's been completed or not, whether it's assigned to a portfolio or not. And if I want to, let's say I know I did a study on Google in the past. I'm going to go back up to the very top and reset this a little bit. Actually, I'm going to make this screen a little bit smaller. And I can do two things. I can enter, the ticker up here, and it will automatically filter my list. And I have 12 previous Google studies or Alphabet studies. If I am looking for, I'm going to erase that. So let's say I'm going to go, hey, I'm going to do a study on Microsoft. Do I have an old one I can work from? Well, 2012, 2013, I might decide to get rid of those and actually delete them before creating a new one, or I might decide to start from them. So that's a handy way. This other search all columns is really handy. Let's say I know I did something on a bank. Bank might be part of the company name, but more likely it is part of the industry, and I can look at all of the bank studies. So don't forget about the search all columns thing up here. Now, when you've got something that you're interested in, the best advice that I can give you is to simply click on the row. So let's say I look at what I created tonight and I want to go back to that. All I have to do is click on the row. It says Open Google. I click on it, and that exact same study that I was looking at is here. I can even mouse over this and see, oh, look, there's that $970 price I put into it. Yes, it's the same one. So that's a quick and dirty look at how to access a recently saved study. And with that, if there's no further questions, I'm going to go back to our PowerPoint and kind of wrap this up.
We're all set.
All right. Well, I want to remind people that we're always having webinars like this, and upcoming, there's a Club Treasurer Workshop on Thursday night. So if you are in a club and you might be a treasurer or assistant treasurer or just interested in the process, this will kind of tell you the nuts and bolts of preparing your tax return for the next year. Tax filings opened on Monday. My iClub, they'll probably reference this. We have e-filing for our first year, so that's going really well. So attend that one. Details are on the Better Investing website about how to sign up. And Anne, you are part of a team that's putting on the specialty retail industry study for Stock Up on February 7th.
That is true.
And another ticker talk on February 22nd. Again, I will reference Anne's talk last night from the January ticker talk about tax rates as one that you should, if you missed it, be sure and check it out, because it can have some implications if you're going to use that preferred procedure. Any other questions or comments before we
No, just a lot of
Leave.
accolades coming in at this point. Susie, great job. Excellent webinar. Great
All right.
information.
Thanks, everyone. And we'll see you next time. So thanks to our backroom staff, our attendees, and you, Ann, and we'll say good night.